Great. Thank you for joining me for this exciting session where we're going to speak about nature. And for those of you who are new to the nature and hear nature being mentioned in more and more sessions, the IPBES, so which is the IPCC for Biodiversity and Ecosystem Services, estimated that over 1 million species are under threat of extinction in the near future, and most of them are under threat of extinction due to human actions. WWF's Living Planet report has shown that we've lost nearly 70% of the population of vertebrates since 1970. I always make the joke that's maybe a lifetime for many of you in the audience, but as people are getting younger, that might not be the case anymore. And the last figure, or the almost last figure that I'll use, is that 96% of mammal biomass is a combination of us and livestock. Only 4% are the combination of our elephants, our giraffes, and other mammals we share a planet with. Often people feel that nature is, an environmental topic, but that's not the case. Whilst I was preparing for this, I read a Global Witness report that stated that over 2,000 environmental defenders, often representatives from indigenous communities, were killed in the past 10 years, being really on the front line of nature protection. So in this session, we're going to speak about nature and insurance. My name is Romie Goedicke den Hertog. I co-lead the work on nature at UNEP Finance Initiative. And today is a really special day for us because we're completing 4 key publications which speak about how financial sector actors can align their activities with the Global Biodiversity Framework, which in the words of the UN Secretary General is our peace treaty with nature and the lodestar of action. So we published a roadmap for all financial actors. Earlier in the year, we also published a publication that looked at the investor role in implementing and adopting the GBF in line with the whole of society approach that the GBF underlines. We did that together with PRI and Finance for Biodiversity. We did a publication for the banking sector, and today, drum roll, we published a report that did so for the insurance sector, which very much, and Butch will add to that later, is a culmination of over a decade of work under the PSI, including the Nature Positive Insurance series that we have held. And what makes it even specialer is that WWF also released a report today, Underwriting Our Planet, which focuses on how insurers can help address both the climate and biodiversity crisis. So for this panel, I think we're a relatively small group, which I quite like. I've seen that with other insurance sessions that we ran globally. I'll first ask Butch and Amandine to present the report to us. Then I have some prepared questions, but I'll definitely also come to you, maybe with a bit less pressure than Butch just gave you, with a few questions. So with that said, I want to introduce you to our amazing panelists. So we have Reto from Swiss Re, who is part of our PSI board. We have Amandine, who leads the work on the finance sector for WWF Swiss. And then, of course, my colleague Butch, who leads the work on insurance. Whilst I was preparing, I realized that it's a bit, it's the European roundtable, but this session has a bit of a Swiss flavor, maybe. So that's quite nice. So maybe, Butch, can I ask you to give us a quick, run-off show of what's in the report that we published earlier today?
Sure, I'll present it. But I think we should declare today, September 13, 2023, as Nature Positive Insurance Day, with all of the things that we're going to be telling you about Nature Positive Insurance. So first, this is what Romie was saying. That's the global picture. Just like on emissions, there's 2 things that make everything on this planet possible: a stable climate and a rich biodiversity of life. So science is telling us we need to reverse that trend, and that's the reason why we have the Global Biodiversity Framework and other treaties coming up. The High Seas Treaty already done, plastic pollution next year. If the agenda on net zero is to bring down emissions to net zero by mid-century, it's actually the reverse for nature. We want to reverse nature loss and be net positive by end of this decade, and we want nature to fully recover by 2050. So if you see the curve on net zero, it goes down. For nature, it should go up. So as Romie said, nature positive insurance is really a new old topic for the PSI. It's not like we woke up today and said, let's do something on nature. We've been doing stuff on the role of ecosystems like mangroves and coral reefs, not only as carbon sinks, but also in buffering storm surge and providing resilience. World heritage sites, natural world heritage in particular, illegal fishing for marine underwriters, plastic pollution, hydropower and the role of insurers there, particularly for high-impact hydropower, environmental pollution liability, and so on and so forth. So this is not a new thing, but we're calling it nature-positive insurance. That's a new thing. And this is a culmination of all of that. After we did the nature-positive insurance series with the conventional biological diversity, I'm just going to give you highlights of what this paper that we've launched today has. It links what can insurance do to support the targets of the Global Biodiversity Framework. So no one has done that yet. We're doing it for the first time. Then on the risk side, what does nature-related risk mean to the insurance business? And then on the opportunity side, what can we do to insure nature? And by insuring nature, we mean it could mean directly insuring natural ecosystems, like mangroves, boreal forests, wetlands, or ensuring activities that have nature positive outcomes, be it sustainable agriculture, sustainable aquaculture, sustainable forestry, that has a positive outcome on nature. Now at the corporate, company, and industry level, what can insurers practically do? They can, for example, set underwriting criteria for nature-negative activities that may be related to insurance transactions. They can also, just like on net zero, they can engage with clients on what are their practices related to nature, be it corporate or retail clients. Then you can ensure the nature-positive transition. As I mentioned, it's not simply ecosystems itself, it's any economic activity that has an impact on nature. And then claims is often undervalued. What can you do to repair instead of replace? Anything that is greener as an option of claims could also be relevant. Obviously, advocacy with governments and policymakers is important. And then, last but not the least, we really want to drive systems change. What is it that we need to do so that nature-positive insurance thinking and practices could really be mainstream globally? So we think that we should support the work of the Task Force on Nature-Related Financial Disclosures and mainstream that. The International Sustainability Standards Boards will also be extending their disclosures to cover nature. Then we need to see how we can embed nature into the risk management and underwriting frameworks within insurance companies. We've already done that in the ESG guides that the PSI has produced. Companies like Swiss Re have embedded that already in their frameworks, but not everyone is doing that. Then, just like on net zero, there's really no metrics yet on how an insurance portfolio could be quantified in terms of an impact on nature. We think that could be an area that we can start on as well. And then how can you then steer underwriting portfolios that would then lead to nature-positive outcomes? So this is a briefing paper, ideas that we've collected based on the work of the PSI, but also interviewing market participants and stakeholders from around the world. Thank you.
Thank you so much. So in summary, we are ready, are you? Right? That's kind of the story. Great. Amandine, can I ask you to do the same presentation or similar to your report?
Sorry. This is just my last slide to show that the nature crisis and the climate crisis are two sides of the same coin. Just because people think that they're not related. But if you look at science, the more that we've destroyed nature, the more that we're seeing also the relationship with climate change as well.
Thank you. So I think we have the presentation, right? As well. So yes, I'm not sure. Yes. So hello everyone. So I'm very pleased today to present you and also to launch together with Deloitte we say the first, but it's no more the first, right? The second, no, I'm joking. No, but a report that is a framework really for insurance to understand their impact they're having on nature and biodiversity through their underwriting activity. So the report is really much focusing on, underwriting, and you might wonder why is the WWF doing a report on underwriting and insurance, and it's simply because we really think that through their underwriting activity, insurance are really a huge lever for change toward a fair, fast, and green transition. And I will just give a quote to show you, why we think it's important. It's a quote from the CEO of AXA, and it's not the 4-degree quote that you all know. It's another one where basically Alex Burbel said that without insurance, that there is no financing, and that when insurance goes together as a group for having a climate-friendly underwriting solution, it could have even a bigger effect than on financing. So it's just to show really how it's important and that it can, underwriting can really be a big lever. So we really think that the most powerful action that insurance can take, and also to mitigate risk, is to become a catalyst for the transition. And in a way, not fuel the issue for which they are at risk. So it's also in their interest. So both Butch and Romie really talk about the climate and biodiversity crisis and how it's having a very devastating, effect on nature. But it's also an issue, and that was discussed also in the panel before, of systemic insurability. And I have a number, which is that 3 actually has estimated that the cost of natural catastrophe in 2002 alone was at 275 billion, and it's an increase of 32% since the last previous 10 years. So it's increasing, and in a way, insurance companies today, in order to react for this increasing risk, are either managing the risk by increasing the premium when they can, when it's legally possible, or they are reducing the eligibility, or they exiting a market, like we saw in California when some insurance started exiting the market. And in a way, this has limit of this strategy, we think, on the middle term. And uncertainty around the seriousness and the frequency of those natural catastrophes really an issue, question the success of this strategy. And this is why we really think that the most powerful action that insurance can take in order to mitigate those risks is to really be a catalyst for change and really become a catalyst here for the green transition. It's in the self-interest of the insurance. And sorry. Yeah. So I will go to last slide. So, what did I do? It disappeared. Oh, no. Okay. So in the report, we have identified 11 levers of change, and we really try to go deep in the transmission mechanism between the underwriting activity of insurance and the impact, both negative and positive, on the biodiversity and climate change. And we structure we gave a framework to structure the discussion around 3 pillars. The first one is what kind of activity insurance are deciding to underwrite or not underwrite. We also talk about phasing out and exclusion. The second pillar is the how. How are activity underwritten? And that is, I think, very interesting, is the product design and also the claim management, and how by having better product design and claim management you can enable or you can incentivize for more sustainable behavior of your clients, And that's, for instance, having schemes such as repair over replace or build back better, and we go in deep in those examples. And the last pillar is more the enabling activities that insurance can do by engaging with their clients, engaging with policymakers, doing strong advocacy. So yeah, that will be the last slide. I mean, you can access the report by simply scanning the code. And we are very happy also to have a webinar on the 26th of September where you can subscribe, where we will present the report in more details.
Thank you so much, Amandine, and also, of course, Butch. And I believe, Amandine, yesterday you handed me this very nice flyer, which was a summary of your report. I don't know if I was the only one getting one, but I think it's a good introduction into the report. So I think before we move to further questions, I want to ask you both to reflect on, what is the overlap or potential differences between those two reports that are released today.
So there is overlap in terms of the approaches on what an insurer can take. I think there's also a distinction where really we also set the Global Biodiversity Framework as a reference point very clearly and put it side by side with goals and targets. And there's also a systemic view on what the insurance industry and key stakeholders can do to amplify nature positive insurance. So it goes on to disclosures, it goes on to what are the missing elements there that we need to get nature positive insurance metrics into the quant side and not just the qualitative aspect. But I would say it's complementary. I think it's great. We knew about the WWF report, but we just didn't want to copy and paste each other's work, obviously. But I think it's a great thing because the more we really like the fact that many more should produce nature positive insurance papers because we are still at the conceptual and piloting stage of this thing. It's a new term. There's a lot of practices out there, but I think orienting it towards global change using global frameworks like the Global Biodiversity Framework are things that are important as a North Star for these activities.
Great, thank you so much. Yeah, and indeed, within the nature space, there is no competition. There is only, additionality to what everyone is doing. So, Reto, 2 reports that are launched. What does that mean for your organization, Swiss Re, and also for your role as PSI board member?
Well, I think first of all, it's great that we see more focus, more interest on the subject, right? I mean, we're still having our hands full with the climate debate and how we really support the energy transition and all of that. And biodiversity and nature has been on our minds for a long time. I think everybody agrees it's a critical element for humankind. But somehow it has been a bit neglected by the financial industry. And I think that needs to change. But at the same time, I think we all understand it's very, very difficult. And I think that is one of the reasons why we haven't fully embraced it so far. And I think we're still struggling to get adequate data to really understand how to do it. So I think it's great that we have 2 more publications in that space. And food for thought, and hopefully many players in the industry will read it very carefully and hopefully try to implement some of these recommendations.
Great, thank you so much. Moira Gill, who is here in the audience now as well, and also attended, of course, our North America roundtable in Toronto earlier this year. And I remember she said, it's not that nature is a new topic, but we haven't been calling it nature. So I think that was a big lesson from my side. So thank you for that, Moira. So I think I want to dive a bit deeper, maybe with you, Butch, into the goals and targets of the GBF. We, of course, have Target D, which speaks about the alignment of financial flows. We have Target 14 and 15 and also 90. So how can the insurance industry align its practice with these targets and play a transformative role in achieving them?
Right. Before that, I want to comment on Reto's thought on the difficulty I can empathize with that. I think while it seems like we've already laid out a lot of things, it's easier said than done. So one example for me is net zero. Carbon is the same unit everywhere, but a natural ecosystem, the boreal forest in Canada is different from the tropical forests in Asia, or the coral reefs, et cetera, or the wetlands in North America. So there's a very unique local flavor for nature that makes it different, like carbon is universal, right? I think that's one thing. The second thing is that natural ecosystems that exist, they are normally public goods. And so you then start to think, what are the challenges of getting public-private engagement to make that work, right? It also surfaced in the earlier session. I just wanted to say that while there's a lot of thought put into this work, it's really easier said than done. And we think that many PSI members are going through the net zero agenda, but I think many companies there haven't really thought through yet what this really means. So I think there's a lot of a community there that we can build in terms of peer exchanges, also with the banks and investors who've also been addressing this. So I think there's a opportunity set also to learn from each other to better understand it, but easier said than done. Now to your question on the Global Biodiversity Framework.
Wondering if it would come or
Right,
would you
so-
skip completely?
So let's keep it. For me, I'd think of it more. So the Global Biodiversity Framework shows all the science and what we need to do to reverse nature laws. So what we need to remember, I think, are there's several things that we need to think about. How can we avoid doing harm to nature, right? That's first thing. No one wants to pollute to begin with. No one wants to. So some people are shaking their heads. So people say that. So, but I think more of like, how can you avoid negative outcomes for nature, be it habitat destruction or pollution, right? And then what's the opportunity set to value nature, to protect nature, to restore it, and to use ecosystems, nature wisely. So I think it's a whole solution set there in terms of preventing damage, protecting, restoring, and promoting the sustainable use of nature. And across that bandwidth, you can think about insurance solutions, right? And if you think about the risk side, I would like to think about the 5 drivers of nature laws according to the Intergovernmental Panel on Biodiversity and Ecosystem Services, IPBES, which is the equivalent of IPCC for nature. And the 5 drivers are land and sea use change, so widespread deforestation for agricultural practices. So that's one driver. Another driver is overexploitation of natural resources, illegal fishing, IU fishing. Then climate change is a driver. Anything that you can do to reduce emissions will reduce the impact of climate change on nature, because the more we have heat waves, extreme weather events, the more nature will suffer, the more it will reduce the capacity of nature to absorb carbon and to provide ecosystem services. Then there's pollution as a 4th one. And then I'll touch on actually the last one, which is invasive alien species. What has that got to do with insurance? Invasive species. So I want to touch on that because it's underexplored. So one example, if you talk to marine hull underwriters and marine cargo underwriters, you know ships have ballasts. And one of the things that transports invasive species around the world is the water ballast there. So marine underwriters have actually scrutinized invasive species in the water ballast of vessels. So we just didn't call that nature positive insurance approach, but that's part of the underwriting process. So I think we can do a lot in terms of reducing things, but there's a whole opportunity set also on protecting nature. The coral reef example in the Mesoamerican reef is good. Swiss Re was part of that, the Nature Conservancy. A coral reef had insurance policy. But there's other important things. We haven't seen enough of mangrove insurance solutions. How about wetlands? Wetlands are the most efficient, most effective carbon sinks in the world. We haven't really done on that still. So I could say that there's so many things I could think of from a solution set in terms of how insurers can support the aims of the Global Biodiversity
I think
Framework.
you want to add to that solution element, Reto?
Yeah, lots of good thoughts here. And I think one of the biggest challenges is that we're talking in many cases about common goods. And so the question is ownership, who should actually take out the insurance? I think that's still one of the main challenges. But on the positive side, for most of these risks, you have the geographical, the geospatial information, and you can monitor and assess the risks in the surroundings. And that's an advantage for innovative insurance products. So you know where the risk is located, you can understand the biodiversity around it, and with that, yeah, you can come up with some creative insurance products. I see that as a big opportunity for us, but the big challenge is really with the common goods and who should be basically the insurance clients for many of these biodiversity services.
Great. So you speak about exciting and innovative. I'll come to you, Amandine, in a minute. Maybe you want to answer this one even. So my worry is, and it's part of the GBF, it says that there is a 700 billion annual funding gap into nature, and that's not like that's preserving the ecosystem services we depend on for our daily lives. Part of that is, stopping subsidies or are nature negative, but there's also this 200 billion funding gap. So our report has amazing examples. The WWF report has amazing examples that are innovative and exciting, but how can we make it more mainstream and boring to reach scale? So I think that's my question to all of you. And maybe Amandine, you want to go first?
Well, on nature-based solution, yeah, we have a few examples in the report. One is Swiss Re with Saint Duke Hendricks, Prince Hendricks Saint Duke in Netherlands. It's restoration, and Swiss Re is providing all construction site insurance for restoring the Saint Duke. So it's very interesting. But yes, we need to see much more of those great example. And I think it's been discussed, but I do think it's on one side. We need more collaboration between a lot of stakeholders. I mean, for mainstreaming the topic of nature-based solution, we need to see more projects and projects which are what we call bankable as well. It's a big topic in the nature-based solution. So yes, on the demand side, and I think on the more supply side, I think it's a collaboration. There is one initiative which I think is particularly interesting. It's this. I never know how to say this, ORRR. This is this Ocean and Risk...
Ocean Resilience Alliance.
Yeah, exactly, Alliance, where you have a lot of stakeholders in it, and it's really interesting because you have banks as well, and insurance, not only insurance, and government, and NGO trying to really actually tackle this issue and of coastal resilience and mangrove insurance, and trying to get the mainstreaming. So it's also a collective effort, I guess.
Great. Any reflections from the others on how we could scale up?
Yes, so advocacy. I think it's good that civil society like WWF is actually recognizing the role of insurers in nature. But frankly, policymakers need to know more about that. I think normally insurance is taken on board as a last item after the whole thing has been thought through. And then, oh, by the way, we need insurance solutions. I think if we could make insurance forefront, and not to say that it's a silver bullet for everything, but as part of the solution set to address, to reverse nature loss and achieve a nature-positive economy, I think it would be really important. It also puts an onus on the industry to be able to communicate that value proposition to its stakeholders. So it's not only individual companies, they are beset with a lot of things that they have to deal with. On the one end, there's adaptation, there's net zero, there's nature, there's the human rights agenda, and then you have plastic pollution on the radar as well. There's so many things that, so I think there's also a role for insurance market bodies, like insurance associations, the Geneva Association who's here as well with us, insurance regulators and supervisors who actually should be there to actually support, be able to support and have enabling frameworks that would actually incentivize the market participants to be able to take into account nature positive insurance strategies. And that's the reason why one of the things that we were putting in the report is the task force on nature related financial disclosures. And I think we should treat it like TCFD. Disclosure is only one element of it. If you don't have a nature strategy for your business, the TNFD would offer that as a framework where disclosure is an element. And I think it's one way to get that going within the company, but it's also one thing to get that going with regulators and policymakers on this agenda. And Vanessa, in the earlier session, mentioned an ecosystem, basically, an ecosystem that has to be built in order that whether you're an accounting firm or a regulator, a market participant, or a policymaker, you have nature embedded in your strategy to be able to get that going at the systemic level to drive the change.
Do you want to add to that, Amandine?
Yeah, just a reaction also of what Butch said even before. It's just like we also look in the report exactly at like the two sides of how can insurance be a catalyst for change through decreasing like their negative impact, which I think is still very important, and increasing the solution and be a part of the solution and the opportunity. And what we advise is like when you look at the 5 drivers of biodiversity change, which we do in the report, we really say, look, you could start with analyzing which are the sectors the most harmful for both biodiversity and climate, and we know them, and start with that. So one example would be agriculture, which I think is very interesting. And here, there is a lot, like in the agricultural sector, for instance, we know that it's not only what you're insured, but it's also how. So we know that there is studies showing that when insurance do crop insurance, it can be an incentive actually for monoculture. It goes together. And so this perverse effect, are very interesting. And to be an actor for change, for instance, and to go now more in the positive, because it's both. In the positive side, you could have insurance scheme, and it's been explored by AXA Climate, for instance, is doing that, where you basically help the farmers to diversify, to have an incentive to diversify actually their culture, but also to use less pesticide and to ensure the transition risk, because it's a lot of risk for a farmer, financial risk actually, to move from a mainstream agriculture to, let's say, a more sustainable agriculture with less pesticide. And there's a few pilot about that. So it's interesting, the agricultural sector, because I think it's both like insurance through the product design. It could have, in a way, perverse effect of some insurance product that you need to be aware of. And at the same time, with innovating product, you can also think, okay, how can it be a positive change? And the example of AXA, it's on wine. It's a pilot they do on wine, which I find very interesting in France, for 3 diseases of a more common wine disease, and they're helping the farmer to better analyze the disease, but they also have a special insurance product that helps them to use less pesticide in a way. So it's a very interesting example.
Yeah, I think it's a very interesting example too, and we also collaborated with AXA quite a bit as part of our TNFD piloting program. So we have been piloting the TNFD framework with 50 of our members. 5 of them have been from insurance. So I think a call from anyone here in the room who's from insurance sector, join that program, because we need much more piloters from that specific sector. Also on the TNFD, we'll be launching its recommendations next week, but also the NGFS last week presented their conceptual framework on nature-related risk, and I think that's very exciting. And as Butch says, measuring is ultimately a means to an end and not an end in itself. So we shouldn't forget that. Before we go to the audience, I want to go to you with a slightly different question. As I said in my introduction, nature is a social topic too. For example, indigenous people and local communities are less than 5% of the global population, yet they are the stewards of more than 80% of remaining biodiversity. They receive less than 1% of ODA, and they're often overseen also in new product development. So how can we, whilst we're scaling up these investments into nature, also make it social and address the communities that are of the forefront of nature protection? And I would be curious to hear your reflections on that. I see you nodding, Amandine, because WWF, of course, engages a lot of these communities.
Yes, so I mean, like you mentioned, we really think that, and it's proven, there's a lot of research about that local people, indigenous people are really key and essential for conservation. They're really guardian of nature, and it's proven that conservation projects are just working better where we include them rather than we exclude them. So it's very important. And I think for insurance, I think it's really about having really strong human rights policy, right? Where you really take into account the local community and based on this free prior and consent consultation, which is really key. And I would say it's also about providing insurance solution to the local community, which are the most affected by climate change and biodiversity. It's also a role, and here parametric insurance, and it was discussed in the panel before, are key, I will say, for protecting local communities. Yeah.
Great. Do you also want to reflect on this question on the social component, Reto?
Well, I think you need to have a more holistic approach to this, right? It's not just the E, it's also the S, and obviously that makes it, again, more complex, more demanding, but I think that's the right way to do it, and have this kind of more holistic perspective on looking at the overall risks and try to come up with the best possible solution given the circumstances. Yeah.
Great, wonderful. With that said, I want to turn to our audience. So by a simple show of hands, you can indicate. So I think we have a question in the back. I don't know, Ella, if you could help with a microphone.
Hello, yeah, I'm Miguel from Santander. I work at the Wealth Management Division at Santander. So I think we're just like starting to understand nature, but my question is, do you think that putting a price on nature as we put on carbon could help to the implementation of nature positive insurance products?
Great, let's take one more there. Ella, to your left.
Thank you. First of all, thanks for the reports. I mean, we have a flood of reports every day, but especially the WWF report. And I had the chance to have a quick look on your summary. The repair instead of replacing is great, and also build back better are also great practical ideas. But my question is more on the not to forget. Let's not forget to avoid the moral hazard, which is sometimes people think that insurance is the solution for everything, but it can actually be also danger. But my question is more about on the investment side of insurance. We are doing some research on how the insurance sectors as investors would invest more on adaptation. And there are a few examples, but I want to explore with you if you have examples of actual instruments or products that are being used already to increase the investments in adaptation. We understand that's a win-win thing, because if you invest more in adaptation, you have to pay less compensation in the future. But it is, for what we saw now, it's a bit slow. So any examples, or what do you think we should do to really increase the investments on adaptation from the insurance sector? Thank you.
Wonderful. Is there one more question? Because I think it always helps to take three. If not, it's fine. Then we'll just start with these two. So I think Amandine from WWF, pricing nature. You probably have an opinion about that, right?
Well, an easy question. Well, no, it's a very big question. It's a very tough question. I mean, you can speak hours about, I think, the topic of pricing nature. I mean, on one side, clearly you do need to have a price, because if you want financial actor to integrate, it need to be priced. On the other side, there is a lot of danger of doing pricing of nature. And when we talk about biodiversity especially, and there is a lot of discussion now about biodiversity credits, then clearly we have to learn from let's say, the carbon market and what didn't work in the carbon market. And I think there's a lot of lesson learned, actually. And you have to be just very, very careful and to have safeguard and a very good, let's say, governance, I think, structure around this whole biodiversity credit topic, and also be sure that it's not being used for offsetting, for instance, because on biodiversity, that would be tricky. But yeah, that's in a nutshell, would be my answer.
Can I add to that? I think the term that's used in the Global Biodiversity Framework is value, and you can think of it in a quant perspective as well. So one example that I could think of, maybe 15 years ago, we gathered insurance industry experts in Geneva, and I had one simple question for the insurance industry in terms of their risk modeling analytics. So when insurers think about catastrophe risk, for example, the formula is standard: hazard, exposure, and vulnerability lead you the determinants of disaster risk. So my question was that, have you integrated nature into that? Like, for example, if there's a coral reef there, does that factor into storm surge risk analytics? If there's a forest there, does it factor in to your analytics? Back then, the answer was no. I think now, yes, increasingly. Not all, but increasingly. And Swiss Re has done Biodiversity Ecosystem Index. They've quantified, they looked at territorial ecosystems. I think next would be the oceans, would be interesting. But that's one way of putting a price or value on nature. And if you recognize that nature has a value from a disaster risk perspective, in addition to being a carbon sink, then you start putting a solution set around it.
Yeah, I see it very similarly. I think putting a value on nature would solve many of our problems. It would create some new ones. I think we have to agree on that too. But I think once there is a value, I think then you have all these incentives to protect it, to think about prevention and all of that. So I think it would be a great move in the right direction, yeah. And by the way, we're not totally there yet for carbon either, so it's not like we're on the fast track here.
Yeah, and just keeping in mind and maybe taking my UNEP hat off a bit here and putting my environmentalist hat on, is that nature has an intrinsic value which is greater than we can put in any economic terms. It's the same that how much do you love your partner and what is that word to you? And it creates a very anthropocentric view. You know, nature isn't there just for us. You know, nature is there for itself. So it's a difficult and interesting space. But we'll go back to the other question, and I don't know if Reto wants to look into the link with adaptation.
Yeah, I think your question was all about prevention and I mean, we looked into that. Haven't cracked that nut yet. The question is, if you think about prevention measures, that typically is an upfront investment where you get the value then over the lifetime of those measures, typically 10 to 15 years, whereas your insurance policies, that will be typically annual policies. So if you invest as an insurer, you would not get the actual reward for all that investment, because there may be a risk that you lose that policy after a year and one of your competitor may step in. So I think that timing issue is what prevented us from pursuing that idea further.
Great, super. Are there other questions from the audience that popped up whilst we were speaking just now? Yeah.
Hi, I'm new to. My name is Matthew Schutte, and I'm with Holochain. I've heard a lot of talk about the need to move fast this last couple of days, and I've also heard many recognitions of us being organizations that have formal processes and often regulatory burdens in terms of needing to manage risk. A lot of the movement that we're saying is needed really involves some forward projection of what habits, what patterns, what things amongst our customers are going to work well. And we have lots of data about the things that worked well in the past and very little about the stuff in the future. I'm actually curious about the steps that are being taken, some of which I've already heard, across the industry to share the learning, spread the risk. I think some of the pieces that got mentioned a moment ago around pilots and the 50 participants, right? I'm curious about what sort of things along those lines are actually in place and working, and what things firms are doing individually to enable the people on the ground who are often not very free to act, right? They're not able to just exercise their own judgment. They're operating within very strict guidelines. How are you enabling them to take into account those local contexts? Does that make sense?
Yeah, thank you for your question. And maybe, Butch, I can ask you to reflect on our overall theory of change as UNEP. That's kind of how I read it. I think for the individual action of actors, I think that's maybe a bit of a tall order for us to answer, but we could, I think, speak about what we as UNEP try to achieve.
Yes. So the Principles for Sustainable Insurance is a UN-backed initiative with the insurance industry. So there's the UN element to it. So the UN is always after the public good. So look at what we've done. You talk about going into the future. On climate change, the big thing a couple of years ago was that we can't simply look backwards. We need to look into climate change scenarios into the future and how does that impact your business. So what we've done was we convened 20 insurers and looked at integrated climate change scenarios, 1.5 degree warming, 2 degree, 4 degrees, and look into the picture, into the future, 5, 10 years down the road. How would that manifest itself in terms of climate-related physical, transition, and litigation risks? And that's a report that's open to the public. If you haven't done that work, you can look at that. The same with the ESG guide of PSI that includes nature, both non-life and life and health. It has nature there. Have a look at it. It covers the best out there, including Swiss Re's and Alliances and everyone. So if you don't have a strategy on ESG and including nature, have a look at that. The same thing that we can do in the paper, if we had done that, I think we should start thinking about nature scenarios going forward and see what would be the implications for the insurance business. So I think it's a good thing. I mean, the past is not a reliable indicator of the future. And I think scenarios is one way we could think about how we can be prudent with our actions today with a bit of foresight down the line.
Thank you, but you wanted to add, Amandine?
Yeah, just to add quickly, like on the scenario piece, because I think it's very important. It's very difficult on biodiversity, especially. It's I mean, you have to realize how, I mean, climate scenario is already tough, but biodiversity scenario, it's like if it needs to be granular on top and local, because that helps.
Multidimensional. Yeah.
It's really difficult, but the NGFS is working on that, and actually we have a project with Swiss Re. Together with AXA, so it's again this like stakeholders. So it's the WWF, it's AXA Research Fund, it's a Swiss Re Institute, and it's EY. And together we are launched like we're not developing scenario because I think we're not clever enough in a way, but we launched an academic challenge. So really asking research to develop the scenario, and we have like a scenario modeling challenge to push. The researcher from academia to do the research a bit more. Yeah.
And create a public good.
And create a public good. Thank you.
Wonderful. So we're running out of time, but I really want to close us off with a small experiment. So I don't know who here in the audience works for an organization, for an insurer. So Reto, you can raise your hand. I know Mora is one. Could you raise your hand? All of you, and because I'm interested to know who in the audience works for an insurer, and then see who would be interested, and you can also only raise your hand for that, to be part of that nature positive insurance forum that Butch was speaking about. So I don't know if we can have a show of hands or we can have no hands and then...
It doesn't have to be insurers only. It's a forum of key stakeholders. So actually, all of you should raise your hands.
Great. Super, thanks so much. And as always, with an experiment, you never know what happens. So thank you so much. Please join me in a big applause for Reto, Amandine, and also Butch.
Thank you, Romie.